Hello everyone. Nice to see so many people here. Also glad that everyone that joins us online today. My name is Niklas Svensson. I'm the Group CFO of Alcadon, and I've been a part of Alcadon for the last 3 years, started in 2019, just after Sonny started. I have a background within audit at Deloitte, where I worked for about 6.5 years. I've also worked as CFO within the railway industry here in Sweden, manufacturing and services of railways, and as a financial director of a manufacturer of heating tools, especially for professional usage. We have now heard our Vision 2025. We have also listened to presentations and deep dives in each of our geographical markets. And now I will try to present our vision for 2025, but in numbers, together with our current financial position. By this, I will try to give you a better understanding of the growth journey that we have done, and also the growth journey that will come going forward. So, as I said, we have done quite a significant growth journey since we were listed in 2016. And in our Vision 2025, we will have a turnover of just around 2.6 billion. That is twice the size that we are today, and we will have an EBITDA of about 280 million and an EBITDA margin just above 10%. That's about 3 times what we have today. We will also have a significant presence in at least 8 geographical European markets. And other important goals for us, or other important measures for us that we also have spoken about earlier today, is employee net promoting score and net promoting score that shall be above 30 on each. We understand that this might sound like an aggressive growth journey going forward, but I will try to break it down and deliver how we will get there. In view of Alcadon's development in the last couple of years, and also the fact that we now are present in new geographical markets, yesterday we issued a press release with updated financial targets. Our targets are split into 3 different pillars, where the first target is growth, which shall be an annual growth over 20% each year over a business cycle. Our second target is profitability, with an EBITDA margin exceeding 10%. And our third target is leverage, calculated as net debt over EBITDA between 2 to 3. As I said before, and as we have heard before in this presentation, other essential targets for us is net promoting score and employee net promoting score. And that is a standardized method to measure the customer loyalty and the employee satisfaction. And everything above 0 is considered to be good, and our target is to be 30. Everything above 20 is considered to be favorable. And this is really important targets in our view in order to create the financial targets that we have set. So how will we come to our Vision 2025? I will not stick to this slide for too long, but if you look here, we had a net sales in 2021 of about 736 million, with an EBITDA of 67 million. Today, by the end of the second quarter, together with Network Center included in our figures, we instead have a net sales of almost 1.4 billion and an EBITDA just below 100 million Swedish crowns. In our Vision 2025, we believe that our net sales will be 2.6 billion with an EBITDA of 280 million. In this slide you can see, and also as Sonny spoke about earlier in his presentation, that we have done a lot of different initiatives in the last couple of years. We have strengthened the management functions, We have focused a lot of margin improvements and cash flow improvements. We have also strengthened our product management group. And all of this led up to the acquisition of 6X in Denmark in 2021, in the beginning of 2021. Later on the same year, we entered Belgium and also Netherlands. When we were listed in 2016, we had a turnover of about 285 million, with an EBITA of 35 million. Today, by the second quarter of 2022, we have a turnover of about 800 million and an EBITA of 61 million. If we add Network Center on that, it instead increases, as I said before, up to 1.4 billion with an EBITA just below 100 million. So quite a significant increase with the acquisition of Network Center. So back to our financial target. Our first financial target is a growth exceeding 20% each year. Sorry about that. So back to our financial target. Here you can see the historical growth in Alcadon, calculated as CAGR. And from when we were listed in 2016 up to 2021, our CAGR has been around 20%. In our Vision 2025, calculated the same way, CAGR on 5 years historical figures, it corresponds to a CAGR of 41%, which is quite significant. Quite a significant increase. But if you instead include Network Center into these figures and where we are today, it actually represents our financial target of 20% in the upcoming 3.5 years. But growth itself is, of course, nothing without profitability. And our second target is a profitability with an EBITA margin above 10% over a business cycle. Now, we do not define what a business cycle is, but during since 2016, the range in Alcadon has been between 6 to 12% in EBITA margin. So we believe an EBITA margin above 10%, looking also at the margins that we are markets that we are present on, is absolutely reasonable. So how will the growth be created? We believe that our growth of 20% each year will be created both organically and also through acquisitions. Out of the growth of 20%, 14% will be organic growth. This is based on the markets that we are on, with the customer agreements that we have, Deutsche Glasfaser in Germany, and with the newly added markets that we have entered, which is categorized with a low fiber penetration and a high market growth. We believe that this is absolutely doable. Above that, we also believe that acquisition is an important step also going forward, and 6% will come through acquisitions in this growth journey. During the last couple of years, we have analyzed and also met a lot of different companies that would fit into Alcadon in a very good way. So we believe that this will continue also in the future. So how about profitability? We have invested a lot in our organization in the last couple of years. We have entered into new markets. We have invested in new sales personnel, in extended warehouses and logistics solutions. This will, of course, be necessary also going forward with the growth that we can see, but not to the same extent that we can see in our sales growth. and increasing our EBITDA margin to 10.8% in our Vision 2025 represent a CAGR in OpEx of 17%, which should be seen in relation to our sales increase of 20%. And in our view, that is highly doable. Our last target is leverage, which is calculated at net debt over EBITDA. And our target is to be between 2 to 3. Today, we have a net debt of just around 440 million, calculated on the second quarter, including the acquisition of Networking Center. Out of that, approximately 85 million is leasing debt, mostly related to properties. When we acquired Network Center, we also refinanced our company, taking up a new bank loan, lasting for 3 + 1 years, in our view, favorable conditions. But in order to decrease our net debt level going forward in relation to our profitability, it is, of course, not only important to increase the profitability, but also to create cash flow and generate cash flow. And Sonny spoke about it before, and I will try to show you here as well that Alcadon has historically had a really strong correlation between its operating profit and its operating cash flow. This has, however, changed when the pandemic hit in 2020. Alcadon was suffering in the beginning quite significantly by the disruption on the supply chains. We saw the needs to increase our stock levels and invest in our capacity to deliver to our customers in time. I think Susanne explained it perfectly when she spoke about the German market. This has benefited us during this period when it comes to sales, but at the same time, it has, of course, impacted our cash flow negatively at the same time. Today, we can see that the supply chain is better. We do get the deliveries with a more foreseeable pace. It's absolutely not back to normal, but we believe that this will be normalized going forward, taking the correlation between our operating profit back to generate cash flow in a good way also going forward. So increasing our profitability together with generating cash will help us or will decrease our net debt levels. A really important internal target to focus on cash is EBITDA over net working capital. We have, and it's important to understand that it's a long-term target, but we have an internal target that EBITDA over net working capital should always be above 50%, seen as a long-term target. We had, for each individual market, we presented our EBITDA in relation to our net working capital, and for instance, in Germany, where we can see a high growth, we need to invest in stock to be able to scale up. On the opposite, we have the mature markets, for instance, Sweden and Norway, where we have a really strong correlation between our operating profit today and our cash flow generating. The balance in this is the most important thing, because without being able to distribute to our customers, it is not possible for us to do business, basically. With that said, hopefully I have given you a little bit clearer view of our vision in 2025 and how we will get there. I will hand over the word for Sonny to finalize the presentation and then open up for Q&A later on. Thank you.
Thank you, Niklas. I'm not going to spend too much time on the summary of this presentation, but thank you all for spending the time with us today. And We're going to leave some room for a Q&A, of course, as well. Now, we come off, first of all, I'd like to say that we just got started. Really, we just got started. We come off the back of a long period since we were founded, basically, where we have always been profitable. We have always showed strong cash flows. But a new journey began about 4 years ago, where we said we need to expand. We see the benefits of these immensely growing markets outside of the Nordic, and we just started that journey. We're doing successful acquisitions, really successful acquisitions. We are creating organic growth, and we are succeeding. In our view, these targets are realistic, sometimes borderline conservative, but we really focus on being realistic. In my view, there's probably no market or a company that is recession-proof. Network infrastructure, and perhaps FTTX or fiber to the X in general, comes rather close. And we are supported by strong megatrends, and these megatrends will not go away. They are essential for us, they're essential for every man and woman on Earth. They are going to be here for a long time. We are going to be an interesting company to follow. I'm 100% sure of that. I hope you will follow us in the future, and that you today got a good glimpse of who we are, what we want, and how we're going to reach those targets. But best of all, I think it's really good that you get to meet our team. This is a fantastic team that I'm extremely proud of, and these are the people and individuals who are going to drive and push us forward. And I think that few companies in our industry can compete with the team that we have. Thank you.